TurboTax self-employed costs approximately $130 for federal and state. A CPA preparing a Schedule C return costs between $300 and $1,500 depending on complexity. Both can produce an accurate tax return for a straightforward self-employed individual. The question is not which one is better in the abstract, it is which one is appropriate for your specific tax situation. There are scenarios where TurboTax is genuinely sufficient, scenarios where you are wasting money on a CPI for a simple return, and scenarios where a CPI is not just better but essential. Here is how to distinguish them. TurboTax and equivalent software is appropriate when your income comes from clearly identified sources, 1 or 2 1099 NEX client invoices, a platform like Upwork or Etsy. Your Schedule C expenses are ordinary, standard deductions without unusual categories. You have no employees, no inventory, no multi-state filing requirements, and no significant asset purchases that require depreciation schedules. You have not had an IRS notice in the past 3 years. Your tax situation has not materially changed from the prior year. In this scenario, well-designed software asks the right questions and produces an accurate return. Paying for a CPI is not adding value, it is adding cost. Tax software limitations. It asks what you know to ask. If you do not know that the self-employed health insurance deduction exists, the software will ask you about it, but only in a specific section you may or may not reach. If you do not know to look for the SE tax deduction, you may complete the return without claiming it. Software is rules-based. It applies the rules you trigger by answering questions correctly. A CPI brings knowledge-based analysis. They review your situation proactively and identify deductions and strategies you would not have known to input. The gap between the two widens as your situation becomes more complex. Circumstances that warrant engaging a CPI or enrolled agent. First, S-Corp election or existing S-Corp structure. An S-Corp requires Form 1120S, a separate payroll system, reasonable salary analysis, and proper shareholder distribution documentation. TurboTax Business handles 1120S preparation but does not provide advisory guidance on reasonable salary determination, the primary IRS audit target for S-Corp. A CPI who works with S-Corp provides that analysis. Second, first year in business with significant startup costs. Equipment purchases requiring Section 179 or bonus depreciation elections, or rental property added to the return. Third, multi-state filing. If you live in one state and earned income in 2 or more states, through client work, events, remote services with nexus implications, your filing involves multiple state returns, potential tax credits for taxes paid to other states, and state-specific rules that vary significantly. Software can handle multi-state returns mechanically, but does not provide the nexus analysis that determines whether you are required to file in those states in the first place. Fourth, IRS correspondence or a prior year audit. Anytime the IRS has contacted you about a specific issue, a CPI who can review the prior year's return and the current situation is worth the fee. Fifth, significant income change, up or down by more than 40% from the prior year. Large income increases create new deduction opportunities, potential qualified business income deduction calculations, retirement account contribution limit changes, and alternative minimum tax exposure. Large income decreases create net operating loss scenarios, potential Roth conversion opportunities, and change the calculus on which retirement account to fund. Software handles the mechanical calculation but does not prompt the planning conversations that a significant income change warrants. Sixth, business sale, dissolution, or acquisition, events with substantial tax consequences that require professional structuring. The enrolled agent is the frequently overlooked middle option. EAS enrolled agents are federally licensed tax practitioners authorized to represent taxpayers before the IRS in all matters. They specialize in tax, unlike CPIs, whose license covers accounting broadly. An EA often charges less than a CPI for tax-specific work while providing the same representation rights and tax expertise. For a small business owner who does not need audited financial statements or accounting services, just accurate tax preparation and IRS representation, an EA frequently provides better value than a CPI at a lower fee. The CPI's most underutilized value proposition is proactive planning, not just return preparation. A CPI who reviews your books in October can identify strategies for the current tax year that remain available, additional retirement contributions, equipment purchases before year-end, timing of income and deductions, and S-Corp salary adjustments. A CPI reviewing your return in March can only report what happened. They cannot change it. If you engage a CPI, the question to ask is not whether they will prepare your return accurately. It is whether they will contact you proactively before December 31st with planning recommendations based on your year-to-date numbers. A hybrid approach used by many successful small business owners use accounting software for monthly bookkeeping and quarterly estimated tax calculations, prepare a draft return using TurboTax, and then share that draft with a CPI for a review. Only engagement, typically $150 to $300. The CPI reviews your completed draft, identifies anything missed or incorrectly reported, and you either sign off or revise. This gives you software cost savings, a professional review, and the CPI's catch of anything non-obvious. It is not suitable for complex returns, but works well for straightforward sole proprietors who simply want a second set of trained eyes. The decision between software and a CPI is not about status or caution. It is about whether professional analysis adds more value than its cost in your specific situation. Simple return, stable income, standard deductions. TurboTax is fine. S-Corp, multi-state, significant asset purchases, first year in business or prior IRS correspondence, the CPI earns their fee and typically more. Know which category you are in and choose accordingly. If you want to ensure your books are organized enough for either option to work efficiently, our video on bookkeeping for non-accountants, the minimum you need to do. Every month covers the exact rules.